Good day, YouTube. This is Jay Money with Falling Forward Financial. Just another article here on Amazon. I've done a couple about them and Google about their split coming up, and I'll go ahead and link those videos in the description as well. This is Amazon's stock split eliminates this one big problem. So Amazon shares climbed 8% in one trading session this week after the company announced a 20-for-1 stock split. So if you don't know, Amazon is going to be doing a 20-for-1 stock split. Very good news. So that's like a breath of fresh air for investors. The retail giant shares have struggled this year, dropping 11% so far. And that's after finishing the year with an increase of less than 3%. If you're an Amazon shareholder, a stock split doesn't change much for you through the actual operation itself. So basically, if you have $10,000 worth of Amazon stock, you're still going to have $10,000 worth of Amazon stock, providing the value stays the same. It's just you'll have more shares at a smaller price. So therefore, you'll be able to afford more of it if you don't have $2,700 to $3,000 to buy one share. So for every one share you own, you'll have 19 more after the split, but the total value of the holding remains the same. Imagine a pie cut into slices. Whether you buy the pie uncut or cut into pieces, its value doesn't change, but the planned stock split does change something for the potential Amazon investors, and this could lead to the share gains down the road. So roadblock for certain investors. The problem with Amazon in recent years has been the high price of its stock. That's exactly why I haven't bought any more of it. You can buy partial shares of this one on Charles Schwab or M1 Finance or Robinhood. If you need a link to those platforms, you can get that in the description and help out the channel, get some free stock, and you can get some free stock as well. It's been a roadblock for certain individual investors who want to make a small initial investment. Amazon stock reached a high of more than $3,600 last year. It's since came down to the $2,800 range, but still expensive. Of course, there's the possibility of buying fractional shares, but not all brokerage firms offer them. So very cool to see this one finally do a split. So the stock split, considering the today's price, will take the price of each share down to about $150. If shareholders approve the plan during the annual meeting in May, the split will happen in early June. So the stock split opens the door to making investment in Amazon a little easier for a wide range of investors. So I can't think that they wouldn't go for this or shoot it down. So $150 is freaking awesome. So you could buy, what would that be, 10, 20, almost 20 shares for what the price is now. So basically, that's why it's a 20-for-1 split, would be $150. So, but that's great news for shareholders and potential shareholders, but the split itself isn't the reason to buy Amazon. That's just a little plus that may jumpstart the share performance coming in the coming months. Here's the reason to add Amazon to your portfolio long term. Amazon has been growing annual revenue for the net income for a number of years, but both figures have reached well into the billions. So here's their net income, and as you can see, just really started taking off in 18 and 20, just a great return. So, and here is their look at their revenue. Basically the same thing, just the revenue keeps going up. A leader in both businesses. The company is a leader in both of its businesses. And first, let's look at retail. Amazon accounts for about 40% of the total U.S. e-commerce sales. That is huge, 40% according to insider intelligence, and we can count on Amazon maintaining leadership thanks to a growth in its subscription service. Prime, various fast and free delivery options mean members are likely to favor ordering on Amazon versus anywhere else. As for cloud computing, Amazon Web-based AWS has continued to maintain a 32%, 33% share of the market over the past 4 years. According to Synergy Group, the closest rival is Microsoft with a 21% share. AWS has picked up major contracts in recent months, such as a deal to support NASDAQ markets. This is part of NASDAQ's plan to become the first complete cloud-based exchange. So, very cool things going on with Amazon. But AWS is important for Amazon since AWS is a key profit driver. Last year, AWS represented 74% of Amazon's total operating income. Wow, that is huge. I didn't think AWS was that big, but that is a huge chunk of their business. So, very cool. None of Amazon's fundamentals change because of the stock split, but as I mentioned above, the stock split opens the door to more potential investors instead of brushing off the stock as too expensive. They may now take time to consider Amazon's current growth and future prospects, and more investors flocking to Amazon mean the stock's doldrums soon may be over, and it could be back to on the road to unstoppable growth. So that's what I'm hoping. I did a video earlier comparing Amazon, Google, and the next companies to look into splits. One was Tesla, I think Broadcom, and the other one was AutoZone. So kind of an interesting video. But you might want to check that out as well. But also went over a little bit about Amazon and Google as well. So, but I'm sure I'll be covering this one a couple more times, and I can't for the life of me think they would shoot down at not splitting. So that would be pretty nice to get a chunk of Amazon for $150. So I've been waiting on this day for a year. So. One of my accounts, I have a cost basis of $1,280. You can leave your cost basis in the description and the comments. That would be interesting to know as well. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.